What's up, guys? It's Jay Lobos coming back to another episode, and today I wanted to have a conversation with you guys out there that are probably going through a financial situation, a hardship. Maybe you lost your job, maybe you lost hours at work, maybe you're going through a situation of you're going from one job to another, maybe you lost your part-time. I wanted to give you guys a few tips you could go ahead and take for yourself so that you're able to go ahead and better your financial situation. Possibly don't default on these credit cards, on these current accounts that you currently have. For you guys out there checking out the channel for the first time, consider liking, subscribing, comment, and share if you find this to be good and educational. So I wanted to go ahead. I had a conversation today literally with a customer of mine. He calls me up and he's like, hey, Justo, listen, I'm going through a situation right now financially. He had a business, a trucking business. Last year it didn't go so well. So literally he's going from having the business, now he's looking for a job. And he's like, I don't know what to do with some of these accounts. So guess what? Obviously, he's considering going into what's called a debt consolidation program. He's like, what do you think about that? Well, one thing that I know about debt consolidations, there's two different types of debt consolidation companies. We have what's called a profit debt consolidation company, and we have a non-profit debt consolidation company. One of the things that I told him, he's like, how would it be possible for me to go ahead and maybe negotiate some of this debt? Well, I told him, well, no creditor is going to want to take less than what they actually gave you. The reason why people are able to save money on some of these accounts, that's when the account has gone into a default status. That means that it's gone over 6 months of uncollected payments. The account got charged off, and most likely it probably got picked up. It probably got bundled up by defaulted accounts from a specific lender, and they probably sold it out to a collection company for pennies on the dollars, nevertheless. And now they're trying to collect the full price, and when they get to us, guess what? Now they're giving us some sort of like discount or whatnot. But keep in mind that the state already gave that creditor a tax break because they weren't able to collect. But it has to go into a charge-off. It has to go into collections. That's really the only time that we're able to go ahead and take some sort of financial benefit. Guys, no lender's going to take less from what they gave you. Now, going back into that debt consolidation aspect of it, because still, guess what? I'm still in a jam. I need to get out of this. So what are some solutions? First off, I would go into what's called the non-profit debt consolidation, because debt consolidation companies that are private, the only way they're going to be able to help you, I don't care what they say, because they say a lot of things. Oh, your credit's going to get better soon or whatever after you're done with the program. You're still going to have derogatory information, guys. They have to stop making payments. And so if right now you have not stopped making payments on your accounts, a solution or suggestion, debt consolidation nonprofit, there's a company upstate in New York. It's called CESI, C-E-S-I, and they're a nonprofit. It's kind of like, you know, like when you get too many tickets and you have to go to school in order for those tickets to be waived or those points to be waived. This is similar to that. But guess what? They have an agreement with the state. They have an agreement with the government. They're able to save you money, but you have to go through a program. So one of the key components, if you're considering debt consolidation or you're looking for a way on how to manage your finances or your debts or whatnot, ask the questions. But if they're telling you that they have to default on these accounts and your goal is to maintain your good, healthy credit, that's not going to be a good outcome. A good outcome could be something similar to like, well, why don't we look into maybe getting a term account, maybe a personal loan through a Space Coast Credit Union, Tropical Financial, Oportun. They offer personal loans, and it's a difference between you paying a 26% variable on a credit card versus having a term for 4 or 5 years at a fixed rate. Look into that. Another thing too that you should look into, maybe think about doing a balance transfer. Keep in mind that when you pay off a credit card or when you're paying that credit card off, it's a 26% variable. About 85% of that debt or of that payment that you're making is going to interest. So if you go ahead and have a conversation with your creditor and you let them know you're going through a hardship, you have to say that. If you don't express that you're going through a hardship, they might want to go ahead and put you in some sort of different type of program. But the goal here is to reduce the interest rate. If you're able to reduce the interest rate, now it's going to be inverted, right? In a sense that you're going to attack more of the principal versus before, obviously, just doing the interest. The whole objective here is to try to keep a sound. So if you do a balance transfer, if you get a personal loan, those are things that are going to be really beneficial. There's not really a good solution besides you getting an additional job, an additional part-time, asking your parents or your friends or somebody for additional resources or whatnot to pay off this debt. But again, guys, you guys have to be careful when you're going into these debt consolidation programs. There's not really a good fix. Nevertheless, keep the utilization as low as possible. And I hope this was really educational. Till the next time, guys, thank you so much for the love and support.